Hi everybody, just before I get going with the weekly video here on the analysis we've done there in the essay, there's quite a few new people to VectorVest, and I just want to take the opportunity to say hi, welcome, and one of the best ways to get to grips with VectorVest is go and check out the training tab. All right, so the training tab here, got some wonderful lessons in there as well. If you click on where it notes webcast archive as well, fire that up. And you'll see over here, Glenn Tompkins does a wonderful job going through the entire VectorVest system. If you get a chance, watch some of the sections there where you need some further assistance. So maybe you want some further knowledge on Unisearch, then go and have a look at Unisearch. Maybe you want to know a bit more about graphs. All right, there it is. So there's some wonderful resources in there. I'll leave that there with you on the training. Okay, let's jump right into it. So if you click on Viewers, and what we've done here per the Watchlist Overview watch lists here. So click on watch lists and then click on overview watch lists. So I've gone to viewers, under watch lists, overview watch lists, and you'll see this one here, property construction companies. I've put in 13 there for you. Okay. So the weekly essay went on to note that this industry is not looking particularly good at the moment. Here's some of the key players, not all of them, but I've put in the key ones there for you. And if I come down to the bottom of the list here, I can see price of $5.48, value of $7.28. So it's undervalued. That's good, right? It's got upside potential, but be careful. Just because something's undervalued, it doesn't always mean it's going to race up to meet its value. If I come down to the bottom here and right click, and I view the watch list average graph, and I bring this across, here's the average of all those stocks, and you can see that earnings have been under a lot of pressure in recent times. Now this is interesting. If I put on sales, if I remove sales to show you how to add this, add parameter, sales and market capital, and then I click on sales, yearly sales, and click on sales over there. And let's do this. I'll right click and make the area graph appear. There we go. So look at that big drop off. And I noted there, the weekly essay there, that effectively you can see that sales have not fallen by this level since 2015. So if I pull this back a little bit further in time, look at that. So you can see there in 2015, there was the last time we had such a big drop. See where it notes freehand line on the drop down, or at least next to the date line on the drop down here. And you can go and then select freehand line. And let's do this. I'll turn off earnings and I'll show you. Let's draw the distance it fell. All right. This is a handy trick. Now I've got the distance and I can go back in time to just double check. Yeah, it's about equivalent to what it fell back in 2015. Okay, if you go all the way back to the global financial crisis, let's go back a little bit here in time, you see that during the global financial crisis, the severity of that drop wasn't as quick. It just slowly sort of was steep nonetheless, but it slowly fell away. But you can see in recent times that drop has been extreme compared to, so the global financial crisis, where it consistently fell to eventually got to a level where it really bottomed out. All right, this has been pretty extreme straight away. Look what happened last time sales fell off. There we go. Those property construction company prices on average fell away. As the sales started to pick up, they started to turn around. Okay, so I'll turn that off for now. Let's zoom it in over the last 5 years. And let's put on EPS, earnings per share. Okay, so we put that back on, and again, I just want to bring this on to show you. You'll see a strong correlation between rising earnings here. You start to see the earnings taking off, and on average, those companies went up. Earnings start to fall, as you've seen here, and you can see in recent times, look at that, the price certainly has been under a lot of pressure. Okay, so the next question then comes down to, well, it looks like they're pretty cheap by historical standards. If you look at that going all the way back to the global financial crisis, you can see that prices are back to sort of where they were around about here. Let's do this, draw on a horizontal line, and then we can match it up now. Click on a date line. So around about here, there we are, back to where they were in 2008. All right, is now the time to consider buying some of those construction companies? Well, to answer that question, look at each individual company on its own. Right, so if I click on the first one, hold my shift key down, click on the last one here, and then click on graph. selected. So here's the first graph, and the layout I've got here per graph layout. See the double drop down key there, just clicking it. I've selected the VectorVest simple layout. So I'm just simply going to look at the earnings. I'm going to turn everything else off. I just want to look at the earnings, and I look at the earnings over the last 5 years. All right, which ones jump out at you in terms of an earnings profile? Big hole there. Okay, there was no data prior to this, but it's not exactly convincing. James Hardie, not too bad. All right, it's been under a little bit of pressure in recent times, but huge uplift there. We saw a big uplift in the price. There's a coronavirus market sell down, but at the same time too, you've seen earnings sort of falling away. Now, James Hardie was one of the ones that did jump out at me. It was the better of a difficult bunch to pick from, just because I can see in recent times earnings has started to move up a bit, and over a 5-year period it has been a fairly decent set of earnings. Not stellar, but not bad. And if I come in here and click on add parameter, and I click on sales and market capitalization, let's click on sales, bring in the sales, and in fact, let's put it on first to begin with, and then right click, then change type, make it an arrow graph. I like the fact that the sales have been growing. That's positive. Earnings on average are not too bad, but not stellar. So again, I'm not totally convinced. I would like to see those earnings tracking up. On average, that trend is down. So it's not standout material here, but nonetheless, let's have a look relative to the others. Compared to Boral, I guess it's fair to say that James Hardie would rather be your pick, but you wouldn't pick it relative to other stocks in the database because you can find much better earning profiles. Okay, so that really jumps out and concerns me in terms of the earnings decline. Have a look here, Stocklands. It's been under a lot of pressure for quite some time from an earnings perspective. Same to the CSR, same to the Lend-Lease. You see, straight away I'm removing the emotion, because you might look at a company like Lend-Lease and go, wow, great big company, provides me with a great buying in opportunity. If I go back in time, it's pretty cheap relative to where it was historically. It's almost back to, where it was in 2008, 2009. But don't fool yourself. Be careful about buying into companies with falling earnings. If you buy into companies with falling earnings, you will experience falling share prices. Okay, so sales here and Sunland Group here, it's been under pressure, and earnings, this one here really doesn't stack up from what we're looking for. So you see a common theme across the industry. So it's fair to say that the construction industry is under a lot of pressure, right? So at the moment, I would simply watch this watch list here, and when things start to turn around, that's when I can consider coming in. Okay, let VectorVest drive the type of stocks that go into your watch list rather than a preconceived idea. Because you might be saying to yourself, well, I want a construction company. And the question I would have to say to you is why currently relative to the other opportunities that you have at your fingertips. All right, so you just simply click on Stock Viewer, and VectorVest will rank and sort the best stocks money can buy each and every day at your fingertips. And you can just simply come in here, make sure it's sorted by VST, and you can come in here and have a look. And you can graph the first 3 or 4 here, for example. And what a difference. Look at that. Look at those earnings on Mineral Resources. Look at those sales going up. Look at this. Temple & Webster. Wow. Consumer discretionary retailing. So it's not a mining stock. Here's another mining company, Fortescue. We've been talking about this for many months now. No surprises there. All right, another mining company, Oz Minerals, wonderful earnings profile. Here's Codan, info technology, hardware and equipment, and into retail as well. But look at that. Much different story to what you've been seeing on those construction stocks. Okay, but having said that, the property construction stocks, they will come back at some point in time. At some point in time, they will come back. When they come back, that's when you consider them. All right. So at the moment, construction's in the doldrums, but as SA goes on to note, it's not always going to be that way. All right. Until next week, I hope you got a lot of value out of this. Bye for now.